So there has been a big shift that has been happening in the stock market. And if you're a person that is largely invested on offshore markets, or your portfolio is more so focused on international stocks, then you would have experienced a big shift in your portfolio in terms of it going down. I've seen a lot of videos created by international content creators where they speak about the crash and some people fueling panic and so forth. And today I really just wanted to break it down for you guys, you, my community, in terms of what does this mean, what is happening, and what you should think about as an investor, because that is very, very important. What the shift that is happening right now can either transfer wealth to you, where you are likely to become wealthy from the shift, or it can also cost you money. But before we get into the video, I want to do two things. First thing, let me just put a disclaimer here now, in the beginning, Guti, I'm not a financial advisor, just Jenny on the blog who cares about her finances and also is always trying to expose herself to financial education so that she can make better decisions and wiser decisions. And so with the information that I gather or the things that I know and get to learn about, I like to then share those with you in this platform so that we can all win financially. But if you do need financial advice, if you do feel like, okay, beyond what I've explained, and as much as you hear what I'm saying, you still do need someone that is reputable, do make sure that you consult with your financial advisor that is certified and that is reputable, that will help you guide you through your portfolio in terms of what you should be thinking about. So that's the first thing. And then the second thing, I do want to introduce myself and say I am Jennifer Nxumalo. I'm a content creator as well as a businesswoman, currently self-employed. I also do content on career growth as well as lifestyle. And I'm thinking that from December going forward, we will be having a segment called Career Wednesdays, where every Wednesday we will be breaking down some of the things that you should be thinking about when it comes to your career. So if you are interested in those things as well, do stick around. If you're also interested in personal finances, do stick around and join us. If you are not subscribed as yet, click that red subscribe button on the bottom, and also don't forget to smash that like button, because it is also one of the biggest ways that you can show support to this channel. With that being said, let us get into this video. I want us to look first at what is happening. We have seen that there has been a shift. Like for me, when I look at my portfolio right now and how it looked like a month ago, they're totally different, but not as much different. But I've experienced the dip, and I saw what happened to the profits that I was making and what I'm making right now. And so that for me was a bit alarming, but they're not alarming enough for me to make irrational decisions. And that is because now I'm more so of a seasoned investor. I really just want to break it down for you, because I know that for many of us, when we're thinking of investing, we just want to think of growth, and it feels good when we see the growth happening. But then when we see the dips happening, it creates anxiety and panic for some of us, that we end up making the wrong decisions, especially if you are not a seasoned investor. And so on this video, I really just want to give you some educational content in the things that you should really be thinking about. So what is happening right now? There is a shift that is happening, and this shift is affecting mostly the tech as well as AI assets. Companies that are listed that are more so on AI technology, as well as ETFs that are more so focused on technology as well as AI, we're experiencing a big shift. And I saw this a lot when it comes to the ETF that I bought, which is the One Invest S&P 500 information technology. It really just went down, but now it's starting to pick up. So the shift that we are seeing happening is we see it mostly on those assets. This is not prevalent in the entire market. We don't see this in many parts of the market, but specifically on information technology as well as AI, that is where the shift is happening. And this shift is actually happening in three ways. We're seeing a sharp pullback whereby the assets were going up. There was a big up, because I remember there was a time whereby I looked at my ETF and it was just shooting up. So there was a big up movement, but then now we're seeing a big pullback in those assets as well. We're also seeing higher volatility during this period of time. You one day open your portfolio, it's like, okay, it's going well, and then the next thing, now when you open it, it's just like not doing well. That is the volatility that I'm speaking about. Another part that has introduced is that it has introduced uncertainty. Because of these changes that are happening in the AI as well as technology, this is based on the evaluations, and a lot of people are questioning whether these companies, they were over exaggerated when it comes to their evaluations or not. So now it's more so of like they are readjusting and they're becoming more realistic, but that does pose uncertainty in terms of where is it going to land. Then the question becomes, is it a crash or an adjustment? So when a crash happens, we see that in the entire market, and that will happen, the shift will be between 25 to 30% very quickly. It will not be a specific segment of the market, but the entire market, similar to what we saw during the pandemic. When it comes to what is happening right now, it is happening in a specific portion of the market, that is information technology as well as AI. But then there can be a correction. Instead of a crash, there can be a correction. A correction is when the market drops between 5 to 15% on a specific area, not on the entire market. However, on a specific area of the market, you will see that change happening between 5 and 15%. And it's not a big change. However, if you own a lot of these assets, you will feel that your portfolio has drastically dropped in terms of its profits because of how your portfolio is structured. So now that we know that a crash happens in the entire market and it's between 25 to 30% of a drop that happens quickly, and that a correction is between 5 to 15% in a specific market, what can we conclude from this? We can conclude that this is not a market crash. So right now we are not experiencing a crash, and that is because this is affecting a specific part of the market. Someone that is highly invested locally right now will not see a difference in terms of their portfolio. They're highly likely that they're not affected by these changes. However, someone that is invested largely on the US market, you will see a big dip in terms of your portfolio. So then we cannot then conclude that this is a crash. It's not a crash, however, it's just a correction. Now that we know that, then the question becomes, should you run towards the stock market or should you run away from the stock market? What should you do as an investor? First thing that I want us to look at is when you should not buy, right? Because that is just as important as knowing when to buy. You also should know when you should not buy, right? You should not be buying right now, especially these types of stocks, the technology one as well, the information technology one as well as the AI. You should not be buying those stocks if you are going to need the money within 6 to 12 months. And that is because of the high volatility as well as the uncertainty that is happening right now. We don't know where this thing is going to land. We also don't know when it's going to cool off. So then taking the money that you're going to need in the next 6 to 12 months might just be a high risk for you. Does not mean that you don't buy other stocks that are there that have nothing to do with technology, that have nothing to do with AI. You can still buy those even if you know that you will need the money within the 12 months or 2 years time. But I will say in most cases when it comes to investing, you do not want to be investing money that you're going to need within a year. And that is because of the volatility of the market, what we are seeing right now. And also, you should not be buying if you do not have an emergency fund. Build that emergency fund and be confident in your emergency fund before you can get into a market, because when you don't have an emergency fund, it also affects on your peace. Now imagine you are invested heavily on these stocks and then these things are happening, but then you also don't have an emergency fund. So it's always important that you do have an emergency fund. And also, you should not be buying, especially in these assets, the information technology as well as AI, if you are not comfortable with the temporary losses. Because here's the thing, when the market is adjusting, when there's a whole volatility happening, big ups and the big downs, what happens that introduces volatility and uncertainty. That also does affect on your short-term losses. It does not affect on your long-term losses, but your short-term losses. Because right now, when I look at my portfolio, I'm experiencing a big shift in terms of my assets from what it was to what it is now. But because I'm comfortable with my short-term losses, I also know that I'm investing for long term. Such things do not really move me. They do not really scare me because I know that this is just a temporary situation. But if you know that you're not comfortable with temporary losses right now and you're starting out in your investment journey, and you've had my videos where I speak about how information technology and AI is just growing right now, and also where we are going in terms of our technology advancements, that it makes a good decision, it makes a wise decision for you to consider the assets in that space. and you've really considered buying those assets, but then you know in your heart of hearts that you cannot stand temporary losses, then please do not buy these assets. Right now, it's something that you should stay away from. Rather, look at other balanced assets. Other balanced assets, there are other ETFs that are doing just as well, that are more so balanced. I'll give you an example. Balanced asset would be your S&P 500. As much as it does have a component of information technology and AI in them, but a large part of those 500 companies have nothing to do with AI. So that introduces to you a balanced asset. Instead of buying, let's say, one invest S&P 500 information technology, and you know very well that you cannot withstand the temporary losses, you seeing red in your portfolio, seeing your portfolio going down and it's changing to red, makes you uncomfortable, then you should not be buying this asset. You should not be buying these assets. And also, you should not be buying if you are investing emotionally. But if you are investing strategically, you have a plan and a strategy in place, then investing on this, you can still buy them honestly. But if you're an emotional investor, then you should not. And also, another thing that is very important here is considering your age. If right now you are close to retirement, then it is not wise for you to be buying such assets because of volatility and the uncertainty that they provide right now. And you know very well that in the next year or in the next 2 years you are retiring, then don't buy these assets. Actually, if you are retiring in the next 2 years, you should not be getting into the stock market and buying stocks as well as high risk assets such as in these ones where it's technology and AI. Rather, you want to be thinking of things that are more so going to preserve your capital. So we think of things such as your bonds, but if you are close to retirement, you just want to stay away from the stock market. You want to stay away from the stock market. Even your financial advisor will tell you that close to the time of retirement, we need to restructure your whole portfolio now, because now we are thinking of capital preservations instead of capital growth. So if you are close to retirement right now, don't buy these assets. Don't do that. But if you're still young, you're still in your 30s, early 40s, and you're not close to retirement, you're still in your 20s, then as much as there's volatility happening right now, but because you're going to be investing for a long period of time, where we're looking at 15 to 20 years, then it is actually okay for you to buy such assets, because eventually they will adjust, eventually they will stabilize, but obviously there will still be ups, there will still be downs. But in that period of time, it's enough period of time for you to withstand the adjustments in the market, the ups and the downs. Now we're going to look at when you should consider buying or holding these assets. If you're investing for a period of 5 to 20 years, it's an enough period for you to be able to withstand the changes. And also, you can buy these assets if you want them cheaper. Like right now for me, I'm so frustrated because I really just want to buy more of these assets that are going down. Why? Because they're cheaper, and I'm bored with myself because I don't have money to buy these assets. So it just means that I can only hold what I already have. You can also buy if you really believe in the company as well as the fund, in terms of it is just strong. It is strong. When you look at the fundamentals of that company, you're realizing that it's strong, then you should buy. That means that you've done your research as well. And also, you can buy if you are investing slowly and consistently. That means they call that dollar cost averaging. We can call it rand cost averaging, where you are investing regularly and also you are being consistent. So maybe let's say in a month you put 1,000 or 500 rands and you buy, that will average itself out over time. So if you are buying in that way, it is always the best way of buying than timing the market. Then let's look at, is this a wealth transfer or what? When the market drops significantly, like what we're seeing right now, especially when it comes to those components that I've spoken about, those that hold their position and actually run towards the stock market, they find that they are able to buy these assets at a cheaper price. That is why then you find that there will be a wealth transfer. But if then you will find the opposite of people that tend to run away when such things happen, and they see the dip and then the next thing they sell. What they do is that they lose on the opportunity of them actually growing their wealth, because now they are selling at a lower price. But people that remain calm and are very strategic, that observe these things and don't become panic sellers, they find that they're able to buy these assets at a cheaper price, meaning that when they start going up, then they make much more profit. You want to be on the side of a non-emotional investor. You don't want to be an emotional investor, and then you don't want to be a short-term thinker. If you are that person, if you're a person that invests emotionally and is a short-term thinker, then you'll find that such things, when they happen, they will always create panic and anxiety for you, and then you end up making the wrong decisions. But if you are a long-term thinker and you are a strategic investor, then such things for you are good news, are things that excite you. Like for me, this is like an exciting moment. It's not a scary moment. As much as my portfolio is going down, but I'm just like, I'm excited for the potential of what this means. The only thing that is standing between me and the stock market right now is me just not having the enough funds for me to be able to invest more or to buy more assets. Let's talk about what you should do right now. And also, by the way, guys, this is not financial advice. This is more so just education, so you are aware of these things. If you need financial advice, please go to someone that is a financial advisor. The thing that I would do is, for me, I would stay invested. I'm staying invested. Actually, I'm not bothered by this. I'm not shaken by this. I'm actually excited by the thing that is happening right now, because I know the potential and I know what it can do for an average person that really just want to grow their wealth. Staying calm for me would be the best thing to do right now. Buying slowly and consistently, I really just want to look at my budget and find a way where I can invest 500 rands at least per month. And also, when I do get payments from brand collaborations, because I've been getting a lot of those. By the way, guys, please support my videos on Instagram as well as TikTok. When you see that it's a brand collaboration, please show me some love. Just like the video, leave a comment, because that does help with just showing the brand that I've got an engaged community. I don't have a lot of collaborations here. I don't actually have any collaborations here on YouTube. But Instagram and TikTok, that is where it's happening. So please show me some love there. So I'm just thinking that when I do get payouts and so forth, I really would love to really buy, but buying slow and consistently, like timing myself, not timing the market, pacing myself as an investor. And then also, you really should be thinking about diversifying right now. So thinking of things such as bonds would be a wise thing right now. And by the way, the next video that I'm going to be creating on the financial component, we're going to be breaking down bonds, government bonds, because I haven't done a video where I break down bonds, with what are they, right? But bonds are the great way of diversifying right now. Also, broad index funds, not just specific index funds, but broad index funds are the great way that you can diversify your portfolio. Also, looking at property assets as well. Those are also a great way of diversifying your portfolio. So basically, what I'm saying here is that you don't just want to be a one-trick pony where you are just only invested on one thing and one thing only. As much as I love information technology as well as AI right now and what it can potentially do for my wealth, however, I'm not fully invested in just those things. My portfolio is very much so balanced, and I would like to balance even further. So what I'm saying here is that think about diversifying your portfolio even more. Don't just be a one-trick pony where you're focused on one thing, but balance your portfolio. As much as you have your international assets, you also should be having your local assets, like Cetrix Top 40. Those are perfect ETFs that look at the local best performing companies. Also, review your emergency fund. If you feel like it's not up to standard, beef it up. Don't focus on the hype. As much as there's a lot of hype that is happening right now, and I feel like American content creators, they're just over the top. Buy a pap. You open your YouTube, it's just them and the reds and the what. Like, relax, chill. Don't focus on the hype. Focus on your strategy, right? And also, consult a financial advisor. I'm not a financial advisor. I'll keep saying that on this video because it's so important right now. I don't want anyone to misconstrue what I'm saying and then think that I'm making myself a financial advisor. No, guys, I'm not. Please. So what can we summarize in terms of what is happening right now? It's not a collapse. It's just a restructuring that is happening right now on AI as well as information technology. We're basically just seeing a big pullback, but it doesn't mean that it'll just keep pulling and pulling. Eventually, the market does adjust itself. So the best thing to do right now, if you're not an emotional investor, is that you just hold and rather observe what is happening on the market, right? And observe critically. Don't be emotionally involved and keep saying, no, this is it, this is going to pick up, it's going to pick back up. But if you see that there's a dip that is more than 30% and it has happened in a short period of time, you really should be thinking wisely in terms of what is the next step for you. So overall, in this video, I just wanted us to look at what is happening on the stock market. How is it? What does it mean? And how you should react. Things that you should also think about as an investor yourself, especially if you are starting out in your investment journey, because this is very, very important. But as I said, this is not financial advice. This is not me saying do this, but rather this is me saying consider these things. If you do feel like you need more than just educational content, you need someone that will look at your portfolio and actually help you decide how you should go about this, then do consult a reputable financial advisor. I will keep saying that, a reputable financial advisor. Don't ask me where you can get a reputable financial advisor. Don't. Because I myself, I've never consulted with a financial advisor, and everything that I've done it based on the education that I've exposed myself to and the things that I've just learned over time and trying things, right? But if you want a reputable financial advisor, please don't ask me. One day when I do become a financial advisor myself, I will let you know. I would let you know for sure. I'm going to close off this video right here. I hope that you found value in it and that it was educational enough for you to help you to not panic sell, to help you not worry about what is happening in the stock market, but rather think clearly and be smart with your next decisions going forward. I will see you guys on the next one. As I said, on the next one, we will be looking at government bonds. And so if you're interested in that as well, do make sure that you watch that. And also don't forget to smash this video, to give this video a big thumbs up, and also join this family if you are currently not subscribed as yet. Would love to have you. I'll see you guys on the next one. Please take care and stay safe. Bye.